Guys, again, we are at the first chapter in our advanced trading strategies and concepts, and under this chapter I would like to show you how to identify cycles. And as you probably are aware, market advance in cycles, either a bullish or a bearish cycle, either up and down, of either, I don't know, a bullish momentum or a bearish momentum. Regardless how you want to call them, these cycles are what defines a market. What you're having in front of you is a euro-dollar monthly chart. The platform, it is the Saxo Trader, and this is one of the most complex platforms in the world. And the reason is the reason that I want to use this platform for our purpose, for our example, is the fact that the euro-dollar monthly chart goes from the inception of the currency. So while a regular MetaTrader account or MetaTrader platform or I don't know, normal brokers show only the couple of probably 10 years back the history, what you can see in here in euro-dollar, it is the euro-dollar monthly chart from the inception. So you can see in here from the 1973, even March 1973, and goes towards 2013. So in here actually the currency, the euro, was being just at its inception. What I want to show you in here is, for example, if you take a trend line, this is the whole movement of the euro. So if you're looking in terms of Elliott waves count, or in terms of identifying cycles and so on, you should count these waves only in terms of these moves. This is the beginnings in 0.60 and the lows in 0.60 and the highs in here in 1.6. That's it. If you're looking in terms of cycles, so a normal identification for cycles going into a specific market, and you can do this type of analysis on any tradable security, starting with equities and moving forward to, I don't know, other currency pair or a specific equity, as a matter of fact. So if you take a trend line, for example, from this inception, I would say that this is a bullish cycle that goes from the lows in here to the highs in here. So this would be one uptrend, one bullish cycle, starting with the 71, as you can see in here, in the 1971, and going towards the 1979. So almost 10 years, the bullish cycle was, the bullish market was on the making. So what I would do in here, for example, I would modify this. Let's make it a little bit thicker, and let's make it green, so that we know that this is a bullish cycle. And from this moment on to the downside, if you take a trend line like this, of course that's starting with 1980 and going towards the 1985, this is a bearish cycle. Let's change the color for the trend line. And normally this should be red, like this, bearish cycle. Let me arrange it. Okay, we'll do that later anyways. Then a new cycle to the upside begins in late 85, and this whole move to the upside should be considered this move in here. Let me do it like this. Okay, so take another trend line, and you have another move to the upside, another bullish cycle, then a bearish cycle, then another bullish one, and according to my rationale, let's say we are still in a bullish cycle. with this pair, as this looks only as a correction, correcting the move that comes in here. Now, from my point of view, how this identifying cycles thing should be treated is to take a look at each specific cycle, and you will see this. We will make this. I will show you how to do this on the next recording. So to look at each specific cycle starting with the inception of the currency, and you will see in here that we will take the exact date when the currency pair was launched, and then looking at here how many times did the price traveled in a bullish cycle, and what were the I don't know, the patterns in it, and so on and so forth. Then the number of days the market trended to the downside, and how many periods did it take. Then the number of days the market started to go to the upside on the next bullish cycle. Then we will try to compare, look for similarities between this one and this one. Okay, so similarities between the two bullish cycles. Then looking for the similarities between the bearish cycle. So making this kind of analysis up to the current prices, then you will try to identify and look for clues between the two, between the bull and the bearish market, and look for alternation. For example, if this is a bullish cycle, so price started from the lows in here going like this, then you look for similarities between this one, between this one, between this one, and between this one. What am I looking for in terms of similarities, in terms of the angle the price moved? Okay, so this is the angle the price moves from the downside in a bullish market. This is the angle for a bearish market. Look for the angle to be the same when price is rising, and look for the angle to be the same when price is going to the downside. This angle of a movement, actually it is being called, in terms of those of you that use the gun approach, it is being called the one with one line. And the one with one line meaning the angle a security or a currency pair, it is moving. So when euro-dollar, for example, is going to the upside, then it is going with an angle for the move to the upside that keeps this pace, so to say. A bullish angle, it is different than a bearish angle, because on a bearish approach you will have always the panic factor associated with the move. But anyways, it should be taken into consideration that there are two different ones. So if this is a bullish market to the upside, then again a bullish market in here, and again a bullish market in here, then you might want to consider, for example, for the move from the upside in here, you might want to consider that this is the starting of a bearish market like this. So you look at the previous move that goes from that ended a bullish cycle and goes towards a bearish cycle, and look for similarities in there. So what we will try to look for similarities, for example, look for the move, the general trend. How many days on the general trend, for example, in this bullish cycle, how many days the price was going to the upside, how many days it was going to the downside. So this was the duration. Look at the starting value, so the price started in here, and look for the ending value. How many pips, the difference between the pips, how it is ending. For example, in here, as you can see, it is ending with a rising wedge. Now, if this bullish cycle is ending with a rising wedge, look for the next bullish cycle to end with a different pattern in terms of alternations to be respected. For example, in here, this bullish cycle seems to be ending with double top. In here, a rising wedge. In here, the bearish cycle is ending with a triangle, with a contracting triangle. In this case, this might be a topping for a bottoming triangle, a bottoming formation. in here this one seems to be an inverted and shoulder, which is the reversal pattern, and so on and so forth. Then you should take each of your cycles. If this is a bullish cycle and this is a bearish cycle, you should look for particularities in each cycle. For example, in here for the first move to the upside, look for things like how many periods. Okay, for example, this is 1, 2, 3, 4, 5, 6, 7 move to the upside. So how many periods are you having? Look for retracement, for Fibonacci retracements between the periods, between the legs, and so on and so forth. Any clue can be of value, as the trend to the upside and the trend to the downside, the cycles are a keen observation each trader should make. Never try to compare two descending cycles or two bearish cycles with one bearish cycle with one bullish cycle, because they are quite different. They should be different, but try to look for similarities between the moves alike. Now in our case in here, I will try to look for this move to the downside. Okay, I will try to look for similarities between the previous two bearish cycles, as probably we are in a bearish one in here. Now on the next recording, I will show you how to what to look for based on this chart. What to look for in terms of the information you should search and analyze. Okay, so stay tuned.